What has the recent rally meant, Alix, for oil companies?
Right. So you were talking about prices being lower today, but overall this quarter they've actually jumped 15%, and we actually forget that. Remember when oil was $40 a barrel?
Yeah.
Right. So what does that mean for energy companies? How about $2.8 billion? That's not bad. And that was perhaps the windfall that Chevron's going to see this quarter. So Chevron makes about $325 to $350 million in cash for every $1 move in oil. And Barclays pointed out in a note that it actually does better than its peers like a ConocoPhillips or an Exxon because it has much more crude in its pipeline than it does, say, natural gas like an Exxon would have. About 67% of its total output is crude. And there are only 4 days left in the quarter. So how about that $2.8 billion in cash when you report earnings?
Yeah.
And the stock really hasn't reflected that to some extent. It's down more than 5% since the end of March.
Okay, so that's sort of the view of the quarter. But as I mentioned, we are seeing sort of these inventory dynamics really dominating oil. Is that the only thing right now?
Yes, pretty much. Most analysts wind up looking at some kind of range for oil prices. Barclays like a $60 to $70 because at $70 you're going to get shale coming in and restarting production and sort of completing the wells that were drilled but not filled. At $60 you're going to wind then turning off the spigot. So that's going to create some kind of range-bound oil prices versus a boom or bust situation that we've seen over the past year, in essence. At the end of the day, and you mentioned it, we still just have too much production, and demand is still a big wild card. It doesn't seem like analysts can figure out what is happening with demand nowadays. How strong is it really in China? Is all that oil going to inventories, or is all that actually being used? And once analysts figure that out, we could have a clearer idea of where oil is headed.
Okay, what about tin, though? Because that's declining.
We never talk about tin.
No.
I'm so pumped. This is the worst performing metal on the LME. It is looking at its biggest first half decline in at least a quarter of a century.
Wow.
Who knew? And this is sort of the same issue that we've been dealing with in terms of supply and demand. Societe Generale says that production will actually rise 3.3% this year, but demand's only going to grow by about 2.5%. And what is tin used in? Electronics. Packaging. So very, very levered to the growth in the global economy, in particular China. There had at one point been a question mark about Myanmar production, but that seems to be cleared up. They're shipping a lot of ore to China, and the global uncertainty is not really kind to these types of metals that are levered to stuff that we buy.
All right.
Tin is cool.
Tin, and who knew that the decline was that big?